Chainlink to 10x in 2022. Yes, you heard me right. It's a powerhouse project. It's an oracle that supplies off-chain data to on-chain to execute smart contracts. But what is the price action and why is it likely to do a 10x in the second half of 2022? Well, that's going to be the focus of today's content. So like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on trading currencies, but now exclusive on cryptocurrency. So let's dive straight in. So we know Chainlink is a powerhouse project. Securely connects smart contracts with off-chain data and services. So Chainlink's decentralized Oracle networks provide tamper-proof inputs, outputs, and computation. In other words, the blockchain smart contracts may need to know sporting events. What's the official score? What's the temperature? What's the price today of certain currencies and cryptocurrencies? Chainlink allows that off-chain data to go on-chain to do what it needs to do. But what we're going to focus on is the buying and selling psychology. What is happening with the price action? So before we jump into the chart, let's have a quick look. With Chainlink, it's currently 6.7 billion market cap, placed 23 out of all cryptocurrencies in terms of the rankings and the market capitalization. Daily trading volume is just under 350 million. But what we're going to look at, I actually did a video on Chainlink this was, believe it or not, nearly a year ago, May 19th, 2021. Is Chainlink on a wave to a downturn? And what we projected in advance, nearly a year ago, saying that Chainlink is showing a particular pattern over here, and this looks like a top. And what I said in this video was we should anticipate some type of A, B, C style correction, right? A, B, C style correction. Boys, just bang on. This is why Elliott Wave and Fibonacci is one of the most powerful tools and methodologies to read the markets, because look at this. I've taken the data back from the exact same chart. This is literally what I drew. So if we look at the video from May, I've just taken the data back. Look what I drew. This is the same drawing. There's a weekly chart. I'm going to unfold the data. What happened with Chainlink over the weeks to come? Look at this. And here we are today. We are right over here today, around here. Oh, still a few more weeks. Bang. Look at that. That's not bad, right? So we projected this in advance. This is what's likely to occur. And then, again, looking at this ABC style correction, ABC style correction, we don't know exactly how it's going to unfold, but more often than not, buying and selling psychology, this would occur time and time again. And then what occurred? Pretty much bang on, right? And that's what we're going to focus on today's video. It's like, okay, what's happening right now with this? So now if we just update this looks like the A, this looks like the B, and it looks like the C is forming, right? That's what we are really, really talking about. But I want to emphasize the power of this, because we projected this in advance over here before this occurred. So this was a nice profit-taking zone based on buying and selling behavior, right? And that's the whole secret. And what we're going to look at today is really what's likely to happen in the future, literally on the upside. Where is the likely low and where is the upside potential, again, based on human buying and selling psychology. Now, if you're brand new to Elliott Waves and Fibonacci and technical analysis, I highly recommend taking my free Elliott Wave and Fibonacci masterclass, which is in the link below. You'll get an opportunity to buy my course. My course literally breaks down Fibonacci and Elliott Waves into detail, really, really detailed. It's going to be some of the stuff that we work on today and use today. And it'll look like this. You just click on this and it'll take you straight to the masterclass. So what I want to do today is we're going to start with a fresh new chart, right? So it's the same chart as what we used before, this one over here. But we're just going to use a fresh chart because I want to cover a couple of things. First, how did we project this in the this top, right? How did we project this in advance before the correction? Because that's half the battle, knowing when to be taking profits. Now, it was actually really simple once you know the basics. And the basics are when you see a 5-wave sequence, markets move in 5s and 3s, 5s and 3s. And here we got a nice clean 5-wave sequence. Right, hopefully that's pretty clear. Now, at the time, if I just take the data back, because I'm just going to take it like this, when you see this, there's particular Fibonacci ratios, and the ratios that we drew were this, right? We got 3 main lines. I covered the details on how to do this in the masterclass, but these are the 3 typical ratios, right? 3 typical ratios: minimum, most common, and then typical maximum. And we can see Chainlink was fast approaching the typical maximum, right? This, amongst with other things, gives us a high indication that, okay, Chainlink from a buying and selling perspective, nothing to do with the fundamentals, right? Because even though it's a powerhouse project, it's an oracle, it's providing a lot of value, it's going to be really, really needed as this blockchain technology evolves so we can execute smart contracts based on real world data. That's important. But most of this buying and selling behavior is based on speculation, right? And we need to know that. We need to be aware of that. So then straight away, what we covered, I covered it in detail in the May 2021 video. This is May 2021. This is what I'm talking about over here. This is May 2021. And we covered all these price projections in advance. And then that's how we did it. That's how we did it. So if you want to learn how to do an end of wave 5 from an Ellie wave standpoint and the Fibonacci ratio, the 3 Fibonacci ratios and how to do them, take the free Ellie wave Fibonacci masterclass, because I covered this end of wave 5 in quite a bit of depth and quite a few good examples. And here's just another case that we can see. So what I'm going to do now is I'll leave this on. I'm just going to get rid of the lines. And as we now know that the market has moved down, we don't need this information. And I'm just going to I'm going to just take it to here. Let's just take it to here. And where does a correction typically end? That's what we want to know next, because we did it in the video. We see these lines over here, but it's like, how do we get these lines? Well, in the masterclass, I covered this also, but we're going to do something called a wave 2 retracement. So after a 5-wave sequence to the upside, the market typically retraces, like it literally pulls back to these particular ratios, these 3 ratios, 50, 62, and 78.6%. It's called a wave 2. And what I mean by that is, I'm going to get not too advanced, but we'll keep it relatively simple. After there's a 5-wave sequence, the 5-wave 1, 2, 3, 4, 5, it's a 5-wave sequence of another wave. So the waves actually have a larger degree count and a lesser degree count. So we want to be aware of what is the grander picture. Where are we within the growth of this particular project based on everyone participating in buying and selling behavior? So it's actually a wave 1. First 1, 2, 3, 4, 5 to the massive upside. It's of a wave 1. So when we're doing the counts now on the downside, we're anticipating an A, B, C, but of a wave 2, right? And typical retracements of wave 2s are these 3 zones over here. So now we are gonna just let the market unfold a bit more, because now we've got this data. There's quite a few things we can do, but what I always like to do in advance is saying we're anticipating some type of wave 2 to unfold. And typically it will occur in an ABC style fashion. So now we've got this data over here and we're over here. So when I see this, what I'm looking at is actually what looks like a wave A, an ABC of a B, and then a final wave C to the downside. I'm just going to change this over. Don't need it so thick. Let's just go black. And then let's just go this as well. Bang. So this is what we're anticipating. And then if we just take the market now to today's data, what we'll see is we are over here now. We are over here. So now we can just get rid of this data like this. So now we've got this, what looks like a nice clean ABC style chart pattern. And we are at the typical maximum retracement, right? So we can actually get rid of the other 2. Right? This will make more and more sense as I just unfold a few more bits of information. I'm going to do, again, we're on a weekly chart, so we're really looking at the macro picture over here. And I just want to do this as well. Yeah, perfect. So I'm going to add one more thing for an end of a wave C of a wave 2, high probability end of a trend zone. So the trend has been down since nearly a year, like down. This has been the major down. This has now also been down. But we're looking for a trend reversal with the potential of Chainlink making all-time new highs. And we're going to finish on today all-time new highs. What is the price projection based on high probability? That's what we're looking for, high probability. So let's just do one last thing. What most people don't realize is this wave A and this wave C actually are related to each other. They're like cousins, or cousins, or they're family, and they often are literally mirrors of each other. So I'm going to actually measure this wave A on the downside. We're going to project it from this wave B. And there's two particular ratios. The most common and the most significant is actually this red line down here. But it's way, way, way down. It's this line over here. Let me just make sure you're seeing it. We got two lines. We got this one over here, and we got this one. This one is not significant right now because it doesn't cluster into the other typical ranges, right? So this one we can actually just delete, and we just get rid of it. And now we are just focused on the one above. So now we can just get rid of these drawings. Perfect. All right, now we got a very significant price zone. Very, very significant price zone that will act more than likely as a support over here. We know that it will be something like this. We don't know exactly, but we know we're in that zone. Right? Hopefully you've seen the power of this, because now in advance, we projected this a year in advance. We even gave the dates. We even gave the dates. You see these lines, these horizontal lines. I gave some dates as well. And it was literally after November of last year, it was likely to complete the correction. And it sounded absurd at the time, because at the time, the market was very optimistic. But I said, we're looking to go sideways to down for more than 6 to 7, 8, 9 months. And this is what's unfolded. So we can really rely on this buying and selling behavior. And crypto especially is incredibly good because the speculation is just higher than other markets. So the psychology tends to reflect itself even clearer. So now what we're going to do is just going to finish on what is, if this ends up being a wave 2. A wave 2, so you know, is a retest of wave 1. And it often creates a really strong support. And that support is like a launch pad, and it launches into wave 3. And wave 3s tend to be the most impulsive wave. Now, we want to be aware that Bitcoin is looking very bearish now. I reckon 8 to 8 weeks, we're going to see some real bearish activity with Bitcoin. And that's probably going to coincide with Chainlink. I'm going to show you one other thing here, which is going to blow your mind, but it's just so phenomenal that we want to be aware of it. Wave C's, this wave here, what looks like this wave C, bump, 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 typically breaks down into 5 waves. And we can see there's this wave 1, looks like a wave 2, looks like a wave 3, looks like a potential wave 4, and one more leg to the downside. One more leg to the downside, and we want to be aware of that. And there's a few Elliott wave rules that really helps us to depict this. But what I'm seeing here is a pretty aggressive wave 1, a 2, looks like a 3, potential 4, and we should get at least one more leg to the downside. Let's just move this into an intermediate count so we can really separate the counts, and you can see the waves like this, right? And that helps us because what we can do now, I cover this in a bit more depth in my advanced courses, but again, we break it down in step-by-step detail. There's particular ratios that are very, very common in these. Now, this is not confirmed, so we just are taking it with a pinch of salt. But typically, we should anticipate this zone over here. And there's a rule in Elliott wave terms where wave 3 cannot be the shortest. So we know that wave 5 cannot be longer than wave 3 in this particular instance because the wave 1 is very aggressive on the downside. So this should be the absolute max in this zone, like $3. That's quite extreme. I'm not saying it is likely to get down here. It's likely to hold over here, but we just know the next zone is down here. So this is a very, very, very high probability low to have a wave 5 of a wave C of a wave 2. That got quite intricate there. That's quite advanced. So when you're doing anything in life, it's good to keep things simple. Learn the basics first. on the basic Elliott Wave 3 rules that you need to know, and just basic Fibonacci retracements, and then just take it one step at a time. But this can be really, really powerful information, especially if there's gonna be two scenarios. One, you bought Chainlink up here and you're hodling from down here. What should you anticipate next? Second might be that you bought down here, it's gone up and it's come back down. It's like, what's happening right now? And then the third is you're looking to get your position in Chainlink. When's the optimal conditions and what's likely to occur next and when. So what we're going to look at and finish on today is what's likely to occur next. So we're going to make a couple of assumptions. One is that this wave 2 low is going to occur in this zone over here, right? We're just going to keep it as a zone, right? And if it does occur, where is Chainlink likely to go? If it takes off and it exceeds this high over here and it exceeds this high over here, where is it likely to go? Well, there's a wave 3 ratio. It's called the golden mean, and it's the Fibonacci golden mean ratio. It's called 1.618. It's the key number that you need to know, and it's most common. So what we're going to do is we're just going to literally measure wave 1, and we're going to project it from what we're estimating to be the wave 2 area. And the two ratios that we really want to be aware of are these two over here, 1.618 and 2.618. And what you'll see, at the beginning you heard me say Chainlink likely to 10x in 2022. So we're not talking about overnight. We might see some bearish behavior beforehand. But what I was referring to, if I can get it on the chart, was these two lines over here. This and this. This is the overextension, so if it goes above what is anticipated, it will normally gravitate to the next. And this is $140. Today's price is $14, so there's your 10x. Is it guaranteed to happen? Absolutely not, but it's just very high probability. Being conservative would be $92, but we may see Chainlink go as low as $10 or thereabouts. So even if it goes down to $9 and then hits $92, there's a 10x. And if it goes down to $9 and then goes up to $140, well, that's a 14x. It's in 1,400%. Obviously, there'll be ups and downs in between, but it's just to be aware of it. And this is typically what would occur time and time again with all markets and all time frames. Chainlink is no exception. But what we now have is this nice wave 1. We've got this, just right here, this nice wave 1. Looks like a pretty clean wave 2 forming. Now we've got the hindsight. But, I've heard some of you say, yeah, Jiggy, is all well and good in hindsight. What about foresight? Well, we did this video on May 19th. This is where I had like probably 10 YouTube subscribers. It was May 19th, 2021. And we literally did this in advance. We did this in advance. And Chainlink looks like it's topping out, not based on the fundamentals, based on the buying and selling behavior, based on speculation, based on the human emotion of fear and greed, which is what drives the market. And the quicker you can understand fear and greed and emotions drive the markets of all the mass participants, then you can literally read them, get a flavor for the psychological mood of the chart and what's likely to occur next. So there you have it. So in the link below, take my free Elliott Wave and Fibonacci masterclass. You'll get instant access, and I break things down for you in great detail. Really, the key things is the Elliott waves, how to read the markets from what Ralph Nelson Elliott figured out in the 1800s and 1900s. I've just simplified it. And then how to apply key Fibonacci ratios when you see these wave structures so you can make better buying decisions and maximize your profits. So you're not buying too early and you're not selling too late. You can see what's likely to happen before it happens. And that's the whole trick that we're going for. And it's probabilities and never certainties. So if you like today's content, like, subscribe, hit the bell notification. We're going to finish off with a quote. It's chapter 2 from my book. It's Warren Buffett. Warren Buffett. Rule number 1, he says, is never lose money. Rule number 2 is never forget. Rule number 1. Now look, taking a loss in the game of trading, buying low, selling high, this probability is never certainty, so it's just the cost of doing business. But really, how I understand that quote is maximize the odds in your favor So there's less chance of you losing money, have proper capital exposure, risk exposure. So you are managing your risk. So it has to be acceptable capital exposure. Know your targets ahead of time and stop and just keep sharpening your axe, being able to read the market. So, because often when you look at the charts for the first time, it just looks like a random bunch of lines. But 50 to 70% of the time, there's clear psychology. And if you're trained, like even with the basics, you'll be able to see things that others cannot see. Therefore, you can make decisions based on objective, mechanical, non emotional information. Because I've seen it so many times, people are very high up with their portfolios, but they just don't know when to sell because it feels like emotionally, because of the euphoria, the optimism, and the greed that sets in, it feels like the markets are going to forever keep going up. Whether it's Bitcoin, whether it's Chainlink, whether it's a small token, whatever it is, or even if it's in a project outside of the crypto space, it's the same emotions that ride and drive the markets. By you having a mechanical, objective way of reading the markets, then you can set aside your emotions, write your plan down, and say, look, it looks like a wave 5 is forming. Time to take profits because after a 5 comes an A, B, C. And we saw that perfectly with Chainlink. And again, if you go back to the May 19th, 2021 video that I did, this was a year ago. A year ago. So we projected this 12 months in advance. That skill set and that information is also available to you. So take the free Elliott Wave and Fibonacci masterclass. I cover the 3 key rules that you must know, and then just getting the basics and starting that whole training process. All right, like, subscribe, hit the bell notification, and I'll see you very soon.